The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
It does every day. And what else do we have going on out here? Let's check in the market just real quick. The market's been up and down and all around. And I think all you have to do is give it about 10 minutes and it'll be up or down 10 points. Been bouncing all around as low as 1834 today and as high as 1861. I don't see anything that says higher or lower with conviction. I've seen bears come in and sell a few times. Bulls come in and buy a few times. And yeah, I don't know what's going on here, but it kind of acts like maybe somebody's trying to support the market out here. Doesn't really want to run it up, but at the same time, don't want to let it going down. Of course, we had Janet Yellen out speaking today. You never know what those little devils at the Fed can be doing on days like that. But, you know, we got down to, 1840 a couple of times, couldn't bust down. We've been up a couple of times, couldn't bust up. So I think we're building a lot of energy. One thing we can say is that we were down and we did have spectacular volume. The old cardinal rule of trading with price and volume is high volume lows aren't a low. They're just a low that has to be tested before it can become a low. So we'll continue watching that. Any kind of any trade to the upside now would be a counter move until we get that test. But trading off at 1851, but 3 billion shares already as we start the show.
That it's all just a little bit of history repeating.
It is history repeating. Of course, one of our best industries here in the United States is Boeing. As a lot of pilots say, Boeing or I'm not going. Anyway, on this day in 1969, a giant new airplane, 231 feet long, weighing 735,000 pounds and capable of carrying up to 490 passengers, makes its maiden flight. Before long, the Boeing 747 has made a jet flight a commonplace of daily life for millions of travelers. And I've talked about it before, but I lived and grew up on Hawaii from the time I was about 3 months old till the time I was 10. And the kind of very, even as a kid, you could really start seeing the difference. Mostly it was a military base, of course, when I was 5 years old. By the time I was 7, you started seeing like the 707s start coming in with the tourists. But even back then, there weren't that many tourists because, of course, it was pretty expensive to get a flight over to Hawaii. And even then, a lot of people would visit us that were related to us because, of course, they had a free place to stay. So I got to meet most of the people that were around my dad's brothers and all the other in-laws because they all came over for a free ride on and a place to stay. But it was very interesting to see the real changes, especially the last couple of years I was there. And as a kid, normally you don't think about a lot of those things, but I think maybe it was because it was so different the last couple of years, starting to see more and more jets over it. But of course, that was a lot to do with these new planes, 4 engines. They could fly over the Atlantic and deliver tourists. Now, of course, it's no big deal to get a flight out, but why I don't remember the trip there because I I was 3 months old. I do remember the trip back, and the Air Force still wouldn't fly everybody back. They would only pay for a steamliner. And if you ever go to Hawaii and go to the Visitors Center right there in Waikiki, they have the stern end of a ship called the Lurleen, and that is the ship that I came back on. Brought my dad's big white Cadillac, which didn't have many miles on it because one of the first things you find out about living on Hawaii is there's just not that far to go. You could drive around the island, but everything was within about 2 miles or 3 miles of everything that you're going to do, and that's about it. But on this day in 1969, started flying 747s, and I'm pretty sure that I started seeing those really start flying in maybe just before I left, and wondering why I couldn't get on one to actually do that. In fact, for somebody that was the son of a pilot, I was not in an airplane until, I'm going to try to think about it, I don't think I was in an airplane until I was 17 years old. Of course, my dad was also very much a tightwad. We had black and white televisions in the house. I think he bought a color television when I was about 20. Give you an idea. That's why we always had to go to other houses to watch TV. I didn't know that the Lost in Space robot had little red hooks on the end of his things. All the stuff that happens when you're buried in technology. The funny part is now I have a friend of mine whose kids actually cut lawns all summer so that they could buy a flat panel TV to watch HD on, because guess what? He was using a television I gave him 12 years ago. That's how long he kind of reminds me of my dad that way. Anyway, on this day in 1969, trading out at 1850 on the S&P cash, already turning 3.1 billion shares. We are turning huge amounts of volume today. So I think we're going to probably get some kind of signal. I am going to be sitting on my hands. I see nothing out here that really says that we are going higher. I see a lot of stuff that says that we are going lower. I had a lot of questions. This was from yesterday, so there's nothing new in it. Let me put up a chart. I had a bunch of emails, and I didn't have time to make slides for them, but I will go through them. If you email me, path@tfnn.com, I will try to get to your question. But I had a bunch of them before the show today, and mostly they all surrounded a couple of things. Can I buy X? And today, apparently, it's all about buying banks and or broker-dealers like Goldman Sachs or the rest of these. And most of the questions revolve around some kind of, well, you know, these banks are going to get bailed out by so-and-so. And I really have to say that I don't think so. And the reason is political, especially over the last 2 days, if you've been watching the news. The arguments have been about the banks, and the discussion has gone very much like the biotechs. We'll talk about this when we return.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, if you watch the news at all, and I don't spend a lot of time watching it, I actually read most of it, and it's a little less impactful and a little less annoying, and not always shoved full of context as the people that think that they know all on TV think that they will tell you. I do know all, though, so I get to say. Just being a little ironic there. But the last 2 days, of course, on the Democratic side, what you've had is Larry David, a.k.a. Mr. Bernie, coming down, of course, on his opponent. And, of course, she had a bunch of money that she got from Goldman Sachs. So the last 2 days, she's been kind of going in slash and burn mode on the banks. And I'm not going to say whether it's all right or wrong. I am going to say, though, that when politics meets most of these businesses and the politicians don't like it, it is much more likely that you see the results of the coal business than you do something else. And we all know how that coal business turned out. But right now, I think that biotech and one of the others now is the banking sector, is going to be incredibly hard to see any kind of bailouts or additional money. I think we're pretty much left to whatever the Fed and the Treasury wants to do. But I don't think that there's a whole bunch coming in either on this side of the pond or especially on the other side of the pond where this is kind of the political will is everybody still hates the banks over there, probably even worse that they do over here. But once a business or a sector like that ends up being political fodder, most traders want to stay away from it because it's a headline risk. Who knows what the next person's going to come and try to justify with a political volley to get through it. So not only do you just have a problem with the banks already, but now you have the piling on of political, what would you call it? Just political downside, headline risk of any kind of addition. So I would be very wary of thinking that we're going to get any kind of instant bounce when we continue and always are continuing to look at the biotechs, IBB. This thing really hasn't gotten any kind of bounce, got a little bounce off the bottom this morning, but still not a whole lot out here. And I think everybody's going to continue to want to stay away from these things as long as they are the political football. That, I don't know, you can call me if you have a different idea, but man, I hate stocks with headline risk, mostly because the big men of the street hate the same thing. They hate somebody coming out trying to make a political point by saying that, we're going to lash these people to a stake in the center of the town square and burn them at the stake. And there's a few things out there that are kind of interesting. I had a couple of these clips that I didn't have time to get to yesterday, but it gets back into the politics of literally everything once, of course, the government's involved in it. But the CEO of Athena Healthcare was out on Friday talking about healthcare. And I've got several of these clips. Unfortunately, I can't remember now. I waited too long, and I can't remember exactly where these are. So I'll just comment after them. But these are a couple of small comments made by the Athena Healthcare CEO.
I absolutely, listen, here's how it works. And again, it would be easier if there were many buyers and not just one, right? Because then some of the buyers could say, hey, Fangul, I'm not including you in my benefit. But when it becomes a mandate from the people, your negotiation power drops way down because the kid's got this invention. He's like, hey, do you want it or not, right? If some people actually said not, he would he'd be forced to behave a little better. But since it's illegal for anyone to say not, he gets to be a jerk.
He's basically talking about, of course, the CEO of that little company that jacked up his prices about $7,500. But I thought that was kind of interesting. But this one, I think, is the one that I wanted to play.
But when you politicize entrepreneurship, suddenly a bad attitude becomes sort of an act against the state. It's got a very kind of Soviet feel, the way they're criminalizing that guy. He's not the most charming guy I've ever seen in my life. But anyway, I'd fight and die for his right to be a jerk. And I don't like the fact that now his jerkiness is becoming a matter of public policy.
I thought that was kind of an interesting way to turn it, and that is that being a jerk has become public policy. But, I guess maybe this is putting a little bit of icing on the cake out here on my thoughts of exactly what's going on in this sector. But I don't see any big desire, probably around Washington, D.C., to get into the firing line of what is probably going to continue to be some level of discourse on banks, and none of it good. And, I don't think as long as they're still in business, politicians can hit them at will. Kind of really tough to respond. I think we saw Jamie Dimon say and kind of kick back a couple of times against Obama, only to suffer the indignity of what a president can do to you when you talk against power. Everybody always says talk truth to power. Unfortunately, if you do, you normally get crushed. And a lot of people were trying to get his head over that political inference out there. But just some thoughts out there. You can give me a call, 877-927-6648. We're trading out at 1846 right now. As I said, just wait 5 minutes. This market's going to be up or down 10 points. 3.2 billion shares. So we've got and do have a ton of volume. The way this market closes today, I think, is going to be most interesting. I am sitting on my hands. We've talked about it for what? A handful of days now, maybe a week. And I don't see anything changing. I continue to see weakness in those European banks. Those European banks are associated means that they have to sell shares of European stocks, which is now coming over and bleeding into our market. We also see exactly what happens with Japan, down almost 5% overnight. None of this stuff says this is going to be over in the next couple of days. And I think that the long-term money is going to be made sitting on my hands and not trading every little fluctuation intraday, although you can make money that way. I think that there's more money to be made, probably sitting on my hands, remaining short, having to live through some of these kind of wild bounces. But it takes me back to the bear markets of 2000 and 2007 and 8. And that is the big money was not, making a few bucks off the top. It was waiting for almost full completions of ABC downs, and sometimes just waiting until the stocks literally went bankrupt, and then waiting for the stocks to bottom with almost no volume. We've gone through that before. But I think we're going to have a good opportunity to make money long and short this year. Unfortunately, the long part will probably be after the elections this fall. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I have just one more clip I want to play, and the only reason I really think that these are interesting and illuminative is because he's speaking his mind. 99% of the time, these CEOs of any company, whether politically influenced or not, are basically, it's kind of like watching Bull Durham, where he tells the new upcoming pitcher how to basically do an interview and say nothing. And 99% of them say nothing. But occasionally one of these people actually do say what's on their mind. I thought it was very interesting.
Same thing true on the payer side. We made it illegal for insurance companies, health insurers, to product manage, to change what they offer. You can't get health insurance that doesn't include desperate acts of surgery on stage 4 cancer, even though it makes you die faster and more miserably. They're not allowed to offer a cheaper product that doesn't have that, and a million other examples like it. So what do you do if you can't diversify or uniqueify your product? You merge and get administrative savings. And we're going, oh my God, they're merging and getting administrative savings. Imagine that.
One of the interviewers was giving him a hard time about, is there anything else you can do to make money other than merge? And basically, you got that idea right there is, no, we can't change our programs. So there's only one way to differentiate ourselves, and that is by size. So I guess if you're thinking about buyouts, probably a good sign that any big move, at least in the healthcare sector for a while, is going to be more based on buyouts and size than anything else. Just very interesting. As I said, not very many CEOs come out and say anything that sounds like it has any emotion or belief in it. It's all kind of that pre-canned stuff that everybody says and has nothing in it. So, yeah. I kind of like some of the stuff. It's nice to see when people actually say what's on their mind instead of what they're worried about someone thinking they're going to say. As we look at charts, again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. But again, don't think that there's a lot going on out here other than me sitting on my hands for a while to see what's going on. And this market just kind of like percolating, you know. You just sit there and watch it, and bloop, bloop, bloop. I don't know how many. Does anybody actually make coffee with those little percolator things anymore that has the glass thing on the top? Kind of remember my mom doing that. It's been a long time since I've seen one of those. Aaron's Rents, we're going to go to that. Not a lot out here. Other than I think this is a good stock for being a canary in the coal mine. Very light volume out here today. If things in the economy were to start pulling back, you would think that something like Aaron's Rents would probably bottom fairly quickly as people run into problem with cash and buy overexpensive products like TVs, washers, and dryers on a weekly pay basis. But who can tell? Anyway, we have had at least one stock out here test with lighter volume. The January 8th low on this one was $20.24. 1 million shares. Got into it yesterday with 670,000 shares after twice basically getting into that range with 1 million shares. So volume's a little lighter. I'm watching this one to see whether or not it sees more weakness or actually finds some level. And, of course, being a doji out here today, it's either the halfway move generally up or, of course, the end. Now, we've had 2 more dojis just a few days ago, so I would probably think that maybe this is one of the few stocks that looks like maybe it could get into it. The only thing is that you really want to see this thing test the $20.24 low first. That's why I'm saying that at least probably the path of least resistance continues to be lower on some of these stocks. Other stocks out here, they're kind of bouncing around lows. This time with more volume is Advanced Auto Parts. I see a lot more of this over the last couple of days than I've seen stocks testing on lighter volume. Yesterday, Advanced Auto Parts basically plunges through the January 15th low of 137.66 that had 1.3 million shares with 2.1 million shares. Now, it closed back in the range, but both you had a piercing of it with higher volume. You also had more energy on the way down than on the way up from this February 1st high. So I think you have at least the most you can hope for is a 50% bounce, I would imagine, and then a retest of that 136, 137 low area once again. But since it's on higher volume, you would want it to test that 136.06 level out there. Kind of hard to see how this wouldn't be a good sector as as the cars continue to age, but kind of hard to say. We've had, let's see what else out here. I've got a few more. Acadia Healthcare Companies, ACHC, back into a fairly long-term gap. This gap has been acting as support for quite a while. This thing started back on the 30th of October in 2014 on some fairly decent volume, 1.7 million shares. Unfortunately, it got clobbered by it on October 22nd with 3.5 million shares. A low is not a low tested on higher volume until it gets tested on lower volume. Energy about the same on the way up as the way down, so I won't be buying it. But literally yesterday, 1.4 million shares into that 3.5 million share low. Today, 627,000 shares. So some of these things may be making some, albeit temporary, lows in this market, and that is one of them. Again, plenty of time to call, 877-927-6648. Had an email out here, and it says, can you please discuss a 10-year, S&P on a 15-year chart with attention to volume and RSI? I could, but I think it would be worthless. And not that your question's worthless. It would just be that my work on this suggests that as the rise of high-frequency traders goes on, that those indexes are the worst of the manipulated. And as we've seen volume come back in, it is probably not as indicative as you would like because, of course, the number one targets for these high-frequency traders are the bigger indexes. And I think it's adding a lot of volume that isn't there when you go back in and look at the long term of the stocks in that. If we actually looked at the S&P and the stocks and the volume in those particular stocks, not in the ETFs, not in the indexes, not in the SPYs, but literally the stocks of those out there, what would you see? And everything that I've been doing here for the last year or two looking into that suggests that as prognosticators, I am not using those much anymore, if at all. I'll talk about what the volume is on the New York Stock Exchange, just so we have kind of a rough idea how the volume is coming in. But most of what I'm going to do is still go back into those charts, but I'm going to add up all the volume of the stocks in that index instead of try to figure out. I'll also use lesser-known ETFs that maybe aren't as well-known as the SPYs, that are probably less susceptible to high-frequency traders running a lot of volume in a stock where that doesn't really indicate the true demand and supply. We'll be back in just a moment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, we're back to flat on the day on the S&P cash. What can you say? 3.4 billion shares on the New York Consolidated Tape. We are using up a tremendous amount of energy today, which is kind of interesting. But man, if you're long here, you got to probably be sweating bullets to figuring out what's going on. Autodesk, making one of the few stocks making at least a signal that you can actually get out there and look at. Volume, one of the few stocks that volume on the way off this December 4th high actually did shrink a little compared to the move up starting on October 2nd into that high. You had some fairly decent volume at that low. That's the October 2nd low, $42.06, 4.4 million shares. So you kind of get close to it and almost into the candle on January 28th. Get a little rally. You get one more move back down. Now, as we're breaking that October 2nd low of 4.4 million shares, 2.3 million shares, what was that? 3 million shares yesterday, 2.4 million shares today. Not a lot of stocks out here doing this, so I'm going to keep that. If I was wrong and it was time to actually cover, one of the few stocks out here that actually may have better risk reward than a lot of others. A lot of them may go up. The problem is what happens if we gap down once again tomorrow? What would people do? And you know, you've got at least a little bit of time probably in a stock like that before you lose your shirt. American Eagle Outfitters, a lot of these stocks continue to head lower. This one's kind of trying to find some kind of support level in these last couple of moves. He had a high volume down day on the 8th of January with 26 million shares. Last couple of days, we're getting back into that with 9 million shares, 2.6 million shares yesterday and today. And what do we have yesterday? 8.2 million shares. So, you know, you've got a lot of volume in there. It's almost a blowout low. I would still say this thing is more than likely headed to the $10 level. What else we have? Erie Pharmaceuticals. Not a bad looking chart. If you actually did want to buy, this is the support level on Erie Pharmaceuticals. I don't know anything about the company, so I'd need to research it more, but at least the pattern is better than most. You've got a high volume high that's untested out there. So you've got the possibility of that $33.25 high from September 17th. Again, I'm not going to be being a hero out here in the biotech or pharma sector. This thing did gap up on June 16th, 2015, with 16 million shares. That gap has been acting as support. We're into it today. Last time we were into it on August 24th with 680,000 shares. Yesterday we had 400,000 shares. Today, a little bit more, but making a little candle out there that wouldn't look all that bad. Maybe we could be bouncing around between that $13 level and maybe there's a gap up there about 22. That would be quite a trade, but we'll continue to keep an eye on those. What else do we have out here as I go through my list of stuff? A lot of these pharma stocks out here looking quite invitingly as they've made some kind of low, but for the most part, I will be gun shy on these. Affirmed Therapeutics, AFMD, made a kind of a nothing low here on January 20th to 660,000 shares. What is interesting to me is the way this thing is just taking baby steps with about 250,000 shares or so far back into this low. Now, it's slightly lower than that now, but you need to close above $2.95. But not a lot of juice driving those stocks lately. Let's find something else a little bit more exciting out here. Again, like I said, a lot of these healthcare stocks look like they're filling some of these gaps. Kind of interesting to see AM in healthcare services. AAS is the symbol on that one. Go back into these gaps that have been acting as support. This goes back to May 7th, 2015. It gapped up on 1.3 million shares. Came back into it, though, on October 22nd with 5 million shares. So you know it's coming back once again like a bad rash. You just don't know when. Back to it last couple of days as it's been in, filling these previous gaps out here. 1.2 million shares yesterday. Kind of doing a little reversal out here today with 750,000 shares. But like I said, there's some pits out here that act like they should hold up. I've been watching a lot of those stocks that should and act like they have found some level of support, but most of them have ended up looking a lot more like the energy stocks of August and September, and that is that they found their low, they had no volume, and they just continued to go lower. Alaska Air Group, we've got this one January 20th, $64.18, 2.7 million shares. Got into it with 1.5 million shares yesterday. It's now back in the trading range today. Volume is light, so a continued decent test of it. I'm just not sure what there is to the upside on Alaskan Air Group, ALK, a sector that has been under fairly decent assault, I guess would be the best way to look at it. Let's go back up here, check. Got a question on Microsoft. Not exactly sure what the question is. MSFT. Take a quick look at it. I mean, this thing's back in its gap. On a standard Wyckoff model, you'd have to say that it's kind of looking like a little buy out here. I dislike, again, that off this last little move from January 20th up to February 1st, and then back down to quote yesterday's low. The energy was higher off this last move, which means that for me, this is not a safe stock to trade, especially in a market like this. I want lighter volume on that last move down. My guess is that any bounce will at least have one more trip back down into this big gap. Gap happened on earnings back on the 23rd of October, if you remember that. 135 million shares, of course, 63 million shares on January 20th. 58 million shares yesterday. Tell you that at least the volume is starting to dry up, but my guess is you got a few more bounces like this before you get any real upside in this sector. Let's check back in here. Like I said, all you got to do is wait about 2 minutes, and the S&P will tell you something different. Now we're on the negative side of the S&P at 1852, but volume continues to just flow quickly. We're already doing 3.5 billion shares on the consolidated tape. And probably not a lot of people understand what the consolidated tape is, so I'll take this last little 30 seconds to explain it. The consolidated New York Stock Exchange is all the shares that trade on the New York Stock Exchange, no matter where they're at, and include the American Stock Exchange. So a pretty good indication of broad stock movements. It does not include any of the index other than the NYSE itself, I think, if I remember right. And that's it. So it is a bigger pool than most. A lot of times you'll hear New York Stock Exchange volume, and it's just the floor traded stocks. And maybe they're talking about 750 million shares. A lot more volume actually trades on the ECNs and the rest of it. But it's a big enough sample size. Just want to make sure that you're always comparing apples to apples.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. I had a good question in the den, and that is all the stuff really segmented out? And actually, it is. If you go to bats.com and look at, what was it underneath the, I think it was on the services, what was it under? Bats, services, market statistics. On Bats Trading, you go to market volume summary. That will take you to this page that actually splits all of it out. If you want to go digging through everything, you can, but there's all kinds of different tapes. The markets actually are one market layered on top of another market layered on top of with the ECNs and everything else. And it is a horrible rat's nest of wiring that actually gets your trade traded. Makes it very easy for high-frequency traders, though, to weasel their way into the trade. But if you really want to see how the volume is broken down into the different tapes, how over the overall volume of the market comes in, and how it's actually reported back into the New York Stock Exchange and the total market. But normally everywhere else you're going to see it just as the total amount for the New York Stock Exchange. You're not going to see it split out like on the NASDAQ. I've never seen it split out other than on this BATS page. Maybe it is, but I've never seen anything or anywhere where it's reported at the end of the day that isn't the total NASDAQ traded shares, unlike the New York Stock Exchange, where you can see just the floor traded volume, which Tom O'Brien reports. Actually, it's more expensive to get just that floor traded volume opposed to the total volume that has to be reported to FINRA and the rest of it. But anyway, there's a great deal of what's going on. I think it's delayed on their site by about 20 minutes. I'm not exactly sure why. Got to think that BATS would be on the Johnny on the spot. But if you look at the volumes on Yahoo, they're always in real time. So of both the New York Stock Exchange and the NASDAQ. If anybody needs those links, you can always email me at path@tfnn.com. Hopefully that answers that question. Kind of going deep into the markets at the moment. And of course, we're back flat. Well, we'll call it flat. Up 2 points on the S&P cash, and the volume just keeps rolling in. So I don't know if there's a whole lot other to say about it other than that. Autoliv, some of these stocks out here are making lower, are breaking lows, and the volume's not really truly accelerating. But again, the energy on these things down was huge. That does not connote normally anything other than a U bottom. Sometimes you know, a little bit of a bounce, then you come back down. But almost always when you see a severe volume come in on the right-hand side of the chart, let's say, you know, let's compare the December 7th high in Autoliv here, ALV, down to the January 20th low, where this thing then rallies up to 117 to the January 27th high. But then you get this huge gap down, you get all this volume, and then, of course, it all dies out here back at the August 24th low. Now, this has gone below the last 2 days, that August 24th low, and there hadn't been a lot of volume. So can you get a bounce? The answer is certainly yes. I don't play them. Anytime that I see this kind of rampant volume come into the downside and no volume show up at the bottoms, can you get a half a day or 2 days of a bounce? You can. But to me, it's too much like playing Russian roulette. I would rather wait for a bounce, see no volume and short it, or see a bounce with volume and wait for it to come back and then pull the trigger then. The watchword is be careful with your cash. Don't try to be a hero. In the meantime, sell when you can, not when you have to. Cover when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.